Gabrielle, I just had one question, which is we keep talking about the economic impact of the tariffs directly. And I just got an email during the broadcast from a CEO who's actually watching us, who said that we're missing the story. It's actually something that I think we have talked about a little bit on the broadcast in the past week. And he said there's a softer economic impact that is not being evaluated in all of this, which is all of these businesses that have industry outside of the United States with customers outside of the United States are going to see a steep sell-off in terms of the number of customers coming in the door, irrespective of what the numbers are, and that this particular person was saying that he is already seeing it.
That's exactly it. I don't think it's just the tariffs themselves. I think it's the bigger uncertainty around policy, and at least this visibility we have that the minimum tariff we should be counting on is 10%. There's also a bigger rethink about the relationship with the U.S. happening overseas. So what I think we're doing right now on a company by company basis is looking at what is the percentage of revenue overseas exposed to that rethink, that potential slowdown, those reciprocal tariffs. But we also have to think about two additional things, which is a percentage of supplier exposure overseas, which then is impacted by these tariffs,
I think what I'm
as
asking,
well as
though,
margins
we're looking at,
as well.
We're looking at Nike on the screen there, for example.
Yeah.
Do you think that people in other countries, we always talk about Michael Jordan famously saying Republicans buy Nikes too, but the question is, do Chinese buy Nikes too if they don't like the United States? And is that something that we should be thinking about? Do Chinese not walk into a McDonald's or a Starbucks, for example?
Andrew, I'm doing a story on this next week. I've got the data. We sell twice as much stuff overseas as we export. $8 trillion of U.S. foreign affiliate sales is at risk through these tariffs right now.
And we shouldn't
we
forget.
sell more overseas, double, than we export. Why? Because U.S. companies go overseas, they set up shop, and they sell over there.
And let's not miss that over the last 7 years, you have already seen a rise in nationalism in China. They have already been taking down their preference for especially American brands and have been focusing on Chinese brands. That wouldn't be new. I think what would be even more new is the rest of the world rethinking that relationship and including in the services side, which I don't think is talked about enough.